In this video, I'm going to teach you the concept of efficiency that allows me to predict the market's direction. There's two terms within this confluence. There's efficient price action or inefficiency in price action. So in an example of a bullish momentum, when price does come back to the same structures that it made previously, price is efficient, right? Because it leaves no gaps. But as you can see on the inefficient price action side, price goes higher, comes a bit lower, does a pullback, but not fully to where it comes back to this level of the efficiency and continues to go higher. So there is a way to trade both of these. You either gonna have price being efficient, and because you know we're doing bullish structures, you can look to immediately buy once we come into the levels of your efficiency. Whereas if price is inefficient, then you're probably gonna be sitting at some tops here, having some bullish structure that was left behind that still hasn't been tested, and then you naturally try to trade the pullback. Okay, so here we're trading some sort of continuation, here we're trading some sort of pullback. And we can use the same knowledge if price is bearish, for example. Try to short here as soon as it comes to the bottom of this structure, or try to buy here in case we have some structure like this. But be aware, because it isn't as simple as this. Within these structures, there's multiple of traps that will induce you into error, even once we come into your efficiency. So this is only a confluence and not to be taken as a whole strategy, right? But it's also a good factor to, like I've said, predict the bias of the market, because in case there is some inefficiency, then you know the price will have to come lower at some point to fill in this efficiency or an overall imbalance. You can adopt the concept of efficiencies just as lower time frames order blocks, because if we maximize the time frame on a structure like this, then these structures will turn themselves into some candles, and those candles, well, you'll use them as order blocks. And inside of these, we can also apply other structures. Okay, so we could be efficient at the top, but let's say there's still some refined structures which price can melt even further to then go higher. And I'm not simply just going to give you the theory, I'm also going to put it into practice. We're going over NQ here, and it isn't as simple as the draws that we were doing. The draws is just to make it simpler for you to understand, but as you know, we keep it real in this channel, and we actually provide you with info that would actually make you profitable in the long run. So in this example right here, we start to head lower until this liquidity right here, because we're also applying other concepts into it. And as soon as we do this sweep, well, we not only sweep a liquidity, but we also have an efficiency that's just above. All right, so we may look to buy here, and once we come to that efficiency, we may look to sell again. But notice how there's still this small inducement here with a beautiful rejection that's currently trapping people. Because we don't fully touch the efficiency, we come close to it, and we go immediately back down, leaving this beautiful rejection candle, and then this becomes a trap, and this same low becomes a trap, and we continue the bullish order flow. The bearish order flow, sorry. The same may be applied here, right? Because we have the structure that is looking like this. Now we're waiting for a price to come back to it. As we come into the 5 minute, we can see that we did pull back higher, but just not fully touching the efficiency, right? So we continue to head lower, and then we make this a trap, right? A sweep of liquidity, come to the efficiency, and then you may have some potential shorts from this. If I also had my custom indicator here, we can see that London close swept the New York lows, which tends to deliver some traps in London close session, but it's also a retracement of the day. So we have the sweep of liquidity. Price was overall bearish in New York session. So if it is a retracement of the day, we may look for buys here until the efficiency, because it wasn't fully touched by this high right here. So the efficiencies may be used as entries, but also as targets. Now you can see that in here, I took the initial efficiency, right, from this structure. But then I started to putting other efficiencies other than these lows, because the structure didn't move that much as soon as we broke the lows. So what we can do here is, instead of just picking the initial efficiency from the structure, we refine it to some other structures, there are these ones, right? Can be this one right here, could be this one right here, this one right here, this one right here. There's multiple structures inside the same structure because market is fractal. The same way I do this one right here, you could also increase the time frame and have an order block here. Now you can see that price doesn't go one single direction forever. Switch bias, and then these same highs can become also efficiencies. The same way as price was doing this, now it is doing this. Okay, and we use that efficiency to then look for buys. Now, the more we increase the time frame, of course, the more likelihood we're gonna have to actually seeing this get touched. For example, if we refine it to the very top of this structure, we have price coming to it, right? So we may have price perhaps coming down here and then leaving this structure behind to then potentially come back to it and continue to go down. Or we may refine it to somewhere here and price comes back here and then go down. But it isn't just about efficiency itself, because liquidity is also a good factor to determine where the price is going to go. And so if we swept this low, we may swap this one right here because it's a liquidity cycle. And as you know, NQ is overall bullish over the long term. So we may also go there and sweep this trend line right here. So there's multiple factors that you also always got to keep in mind and not just one simple confluence. And I marked some efficiencies in green that are just bullish efficiencies apart from the blue ones, which are marked for sells. The green ones you may look to buy. Same way as we did some refined structure here. Boom, you may look to buy here, and you can see how price bounces from it to go for a blue one to then go back lower. We may start to add a lot of stuff into the strategy, right? Let's say we have this structure right here. So price is bearish, right? It's overall bearish, is making a pullback on this frame right here. It's coming to an efficiency, right? So we may look to short from here because price is overall bearish, and we're coming to that efficiency that's also refined. And below it, to make it another confluence for hard trade, we have this inefficiency right here. So this is how you add things together. And on the charts, I can show you way more examples of price coming to it, boom, going higher, but then it has also left this refined one below. And although we came to this one, that is the initial one, and we bounced from it and made some bullish structure, we still came to sweep this liquidity and came back to another structure that is a more refined one inside of this block. Here we have a sweep of liquidity. Right above it, there's an inefficiency. Once it comes back to it, it doesn't necessarily mean because we went lower here that we're necessarily bearish now. It was just a liquidity sweep. So now because this was swept, this will get swept as well. I may try the shorts here, you might get a win from this move, but then price continues to go higher, and you just try to anticipate some longs here until that same liquidity. You have an efficiency right here, price is super low from it, so then you can try to buy here to then go to inefficiency. Using efficiencies, trying to go to inefficiencies, and using inefficiencies, try to go for the efficiencies. On GU, you can see that there was this structure right here, and as we come to it, there was multiple chances of buying. So the first initial touch on the efficiency would have gave you a win, but like I've mentioned, trading is way more than just one single confluence because there's way more stuff in this that goes into positioning a trade, like the previous daily low that was swept. And as you can see, we also come even further than that right after. Another example on a refined efficiency is this one right here. So we have this structure, right? We're constantly making new structure here. Instead of picking the whole thing up, that would be kind of here. We didn't go super far, and we played around this level multiple times. So instead of that, I'm picking the highest point, that is this refined structure right here. And as we come to it, there is multiple things, of course, that I've said that are going into this strategy, but we managed to get ourselves a nice little win. And I know this may have been complex and not enough as a trading strategy in the whole, so I'll link a video that corresponds to this lesson right here on where you can use the strategy that also applies this method. And I'll see you in there. Thank you for watching.